The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, February 28th show. I am your host and mortgage expert, Tina Mitchell. I'm committed to providing you knowledge needed to be successful in everything regarding your financing. Knowledge is power, and that's why I'm here for the Money Hour. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but I'm here to answer or connect you with any guests that I have in studio. Please call into the show at 1-855-400-1150. Again, 1-855-400-1150 or online at themoneyhour.com. And the lineup in studio today, Lloyd Hara with King County Assessor. Lloyd is a regular contributor of my show and comes into studio to share the most recent things happening with your property taxes and a little behind the scenes at the assessor's office. Today we're going to discuss 2015 property taxes and property values. Also another regular contributor of the show, Skylar Olsen with Zillow. Get your edge in real estate with Zillow. So it's going to be a great conversation, as always, with Skylar to hear what's happening over at Zillow. And last guest in studio and another regular contributor of the show, Janet Greeling with Genworth Financial P&W Insurance Services. Secure a healthy financial future with long-term care insurance. Discover the right care option for you and your family. Great information and great guests in studio. For more information on any topic or if you want to discuss anything with my guest, please feel free to call into the show at 1-855-400-1150. Again, 1-855-400-1150 or online at themoneyhour.com. Let's go ahead and start out today's show, as always, with a little money chat.
Money.
Mortgage insurance companies are not equal. That's what I want to share with you today. Those of you that are not regular listeners of the show, I do mortgages as a full-time career and just hang out here with you on the weekends for a little money chat and the money hour. But mortgage insurance companies, if you're coming in with less than a 20% down payment, you're going to be paying private mortgage insurance. You'll have to figure out how you want to pay that. And I'm going to go over some options here. But what most consumers do not know is you actually have options as far as the mortgage insurance company. Now, I should step backwards, not options that you get to make a decision. The mortgage consultant that's representing your financing and the mortgage company are shopping or not shopping for mortgage insurance. So just to be clarification, you do not have the ability as a consumer to shop mortgage insurance, but your mortgage consultant does. What's important is to be asking the question if they have options to work with all mortgage insurance carriers, because majority of your major banks or credit unions, they're typically going to have one carrier that they use just for system purposes. And a lot of times it may not be the best carrier that's going to be the lowest cost option. So most consumers don't realize that mortgage insurance and the cost of PMI is different depending on the mortgage insurance company that you go with a lot of the time. Sometimes the pricing is going to be the same, but other times are not. And the reason why is because of how their algorithms actually price mortgage insurance. So there are 5 major carriers for mortgage insurance. You have Genworth, United Guarantee, MGIC, Radian, and Essent. So some of the mortgage insurance companies are straightforward in how the pricing is. Other ones are based on, again, the algorithms that they use on the risk factor. And it's looking at a lot of different categories. Now, every mortgage insurance company is going to be based risk factor, obviously, on credit score. So if you have a certain credit score, you're going to get a better pricing model, just like you would on a mortgage interest rate or anything else that you're shopping for. Credit score is going to determine what that cost for that product or that option is going to be. Now, loan to value, all mortgage insurance companies are going to be straightforward as far as your loan to value. So if you're coming in with a 5% down payment, you're going to pay a premium mortgage insurance, versus if you're coming in with a 15% down payment, the cost of your mortgage insurance or private mortgage insurance. I'm saying both mortgage insurance or MI, more known your PMI for private mortgage insurance. Same thing. What most people don't understand is there's at least two of the mortgage insurance companies are based on risk factor on other items. Property location is a big one. So depending on where your zip code is at, when you run the pricing through the 5 different mortgage insurance companies, 2 of them are going to have better pricing model or a higher pricing model depending on the other factors. So if you're buying a home in Bellevue versus buying a home in Tacoma, mortgage insurance is at a higher risk in the South End, statistically, everything's based on statistics, than what you're going to have in Bellevue. And a lot of different risk factor or pricing can be in different states. But just in zip codes in my location, if I'm running it in Tacoma versus Bellevue, I may see a different pricing structure. Debt to income ratio is a big one as well. Now, again, not all mortgage insurance companies have a difference between debt to income ratio, either qualify or don't, but there are 2 mortgage insurance carriers that the lower your debt to income ratio, the better cost of mortgage insurance is going to be. Now, I've seen a huge difference in the cost, especially when you do a single premium or what I call a buyout. I've talked about buyout of mortgage insurance a lot in studio during my money chat, and it gives you an option not to have to pay private mortgage insurance on a monthly basis, but instead just buy it out and you can actually finance it into your loan. It's really awesome. So we could be looking at a difference of 1.75% to maybe 2.25% in the cost just based on that one factor in your debt to income ratio. Now, here's another one, number of income borrowers that you have on the loan application. Now, if you think about this, it really does make sense. If you were lending on the risk of that mortgage getting paid back, wouldn't it make sense to you that if you have a spouse situation or a borrower and a co-borrower where both of them have income, both employed and working, that you would have a less of a risk that they're going to default on the home, which ultimately it's the purpose of mortgage insurance, is to protect the bank in case the consumer defaults on that home loan. So it's a less risk if you have 2 income borrowers. So there are a couple of mortgage insurance companies that will price differently based on the fact that you have 2 income workers versus just 1 income worker. So those are just a few different things that can be indicators. And most important is just to know, just to ask the question, does your mortgage consultant have access to all the mortgage insurance companies, and have them run the analysis and send over the PDF report. You can look at it and you can say here, see all the 5 mortgage insurance companies, what the costs are, to make sure that you're securing the best price, or that your mortgage consultant is securing the best price for you. Just a recap again on mortgage insurance options for those of you that have not heard me talk about this in mortgage during my mortgage chat, because it's really important, and I run into consumers all the time, day in and day out, and referral partners that don't know that there are different options to pay mortgage insurance. You can pay it, as everyone knows, on a monthly basis. That's the standard way that you're going to pay mortgage insurance. You can also do what's called a single premium. I call it a buyout because it's just a one-time buy it out. It's just my term for single premium. You can do a lender pay. Lender pay basically means there is no mortgage insurance cost that you're going to see anywhere. Now, where you're going to pay it is you're going to pay it in a higher interest rate. I'm not favorable to that option unless it's a really short-term loan. My favorite is a buyout. If I were purchasing a home myself or refinancing and I had to pay mortgage insurance, I would do the single premium buyout option. And then you also have what's called a split. A split is just what it sounds like. It's a split in a combination of 2. It's a split of the monthly and a split of the single premium. So you're going to pay a lower single premium than you would with a complete buyout, and you'll pay a lower monthly than you would with a complete monthly, and you're split in between the 2. I don't know. I just make a decision whether you want monthly or you want buyout is my thing. But anyways, you've got options, and that's most important. Again, getting a mortgage, getting anything else that you're going to secure, options is really what it's about, is just weighing out the different options that you have to make the best financial decision for you and for your family. Coming up next in the Money Hour, our King County Assessor in studio right now, Lloyd Hara, here to share recent things happening at the assessor's office and your property taxes. Again, right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert Tina Mitchell right here on 1150 AM KKNW, the Saturday, February 28th show. I provide you news on everything money, fresh information on market trends and conditions in our local economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can always call into the show at 1-855-400-1150 or go online, listen to any of the podcasts. If you miss any of the beginning or middle or end of the show, just go online and you can listen to anything. And I can almost guarantee if you go to the search and you search anything relating money on any topic, you'll probably find it in one of my podcasts here for the Money Hour. In studio right now, Lloyd Hara, King County Assessor. Lloyd, thank you for coming back.
Thank you, Tina. It's always a pleasure.
And we're just talking. Usually we get the privilege to have you in studio about every quarter. And you were one of my guests that have been with me for my 3 different radio shows that I've had. So you've been with me since the very, very beginning.
Well, it's been exciting, and I think we get great responses from your listeners who
Yes.
also call back into our office that want more information.
A little bit behind the scenes of what happens over at your office. It's a lot of fun.
True.
And for new listeners that have not heard Lloyd before, little background, a respective veteran public official was elected as King County Assessor in November 2011. Lloyd is a tireless advocate for taxpayers. That is really nice to have an advocate for taxpayers. And a champion openness on transparency for government agencies. He most recently served as Seattle Port Commissioner, bringing new levels of accountability and leadership to the port. Lloyd was King County's youngest auditor and award-winning national recognized Seattle City Treasurer and a public finance expert. As a Seattle native, and his distinguished record of public services spans more than 40 years. Wow, Lloyd. I'm 20 years in my arena. You've got double up on me.
Well, it's been exciting to be serving the public. So
I'm sure that it has. Well, Lloyd, let's go ahead and do a little recap for our audience and my listeners on the values for 2014.
Well, in 2014, the King County was the second fastest urban growing county. And as a consequence, values have increased approximately 14% during last year. And overall, we went from $340 billion up to $388 billion. So that's a fairly significant increase. And new construction, you might have noticed all the cranes that have been popping up, $5.4 billion. And that's the highest that it's been in the last 3.5 years. So that's surprising.
That's surprising stats only because we only have so much land. You'd think that we'd start running out, but they're still building new construction.
Well, if you just kind of look around the area, Bellevue, Seattle, Redmond, etc., you see a lot of cranes.
Yes.
And at one point, there was even a shortage of cranes in the area. So.
Wow. So, Lloyd, what is your forecast over at the assessor's office as far as what's going to be happening for 2015 with our property values?
Well, we value property as of January 1st, 2015. So we look back 2014, 13 at the values that are occurring. And with those values, we definitely see an uptick. During last year, we had, of the 86 areas that we look at in King County, we had 85 that went up. I suspect this next year that we'll probably have all 86. The only area that did not go up in 2014 was the recreation areas up in Snoqualmie and Stevens Pass.
Okay. Wow.
So I think the economy is coming back, and I think that should make most people quite happy and to see that many folks are now getting out from under their mortgages,
Yeah.
and they're getting back to full value. So,
Which is really exciting. It'd be exciting to just see that people can actually, not only that they can get out and sell because of that, but hopefully they get encouraged when we get some more inventory, because as you know, Lloyd, that's just really our challenge right now is the lack of inventory. Lloyd, let's talk a little bit about, again, behind the scenes of what happens over at the assessor's office. What are you guys doing over there day in and day out?
Day in, day out, we value approximately 700,000 parcels each year. And 1/6, we physically have boots on the ground and will be inspecting those particular properties. We have 161 tax districts within King County, of which we have 594 what we call levy codes. So depending upon where you live, that will determine the rate of tax that you will pay. And you may ask, okay, so what's happening? We want to make sure that everybody is being fairly and uniformly appraised. And why is that important to you as a taxpayer? Because I want no one to pay any more or less tax than required by law. We probably have one of the most open and transparent websites, and you can get data from any place in the country. I mean, it's absolutely amazing that folks call our office all the time and they say, wow, we can gather almost any information we can about property within King County. And that's why we want it. We want it to be open and transparent so that you, the taxpayer, or the citizen, or if you're in the real estate business, can come in and take a look for yourself.
Yeah, and I think that's a lot of people don't realize what they do have access to on your website. Also, in the appeal process, Lloyd, and we've talked about this before, but if you do have any concerns with the value, going through and just taking a look at on the appeal process but before do that, wasting your time, make sure that you're checking the data and seeing if it really makes sense for you to go through that process.
Absolutely. 2 years ago, Tina, which we talked about, we instituted and what we call e-appeals, an online website where you can go in, take a look. You can look at comparable sales in your neighborhood, so you can compare with your neighbors or anybody else to see whether or not your values are correct. You can only appeal your value. You cannot appeal your tax.
Makes total sense. So let's talk about evaluations, because I think a lot of people don't realize actually what that evaluation consists of. And to be honest with you, Lloyd, until I had you in studio many, many years ago for the first time, I didn't know. And I'm in the mortgage industry. So can you talk about that?
Well, first of all, we look at the value of the land if vacant. Okay, and in some cases, if it's highly built up, we have some opportunity, especially on teardowns. People know what they paid for some of that property, so we can get a proxy value as to what those lands would be worth. And then secondly, it gets down to the structure of the improvement, what we call the improvement, and we place a value on that. And if it's a residential property, it's primarily done by what the market, that is sales. And if it's commercial, it could be done on cost, could be done on income, or a combination of sales.
And the piece of that, Lloyd, too, is understanding that what is the percent now? It's only 48% of your taxes are actually based on the assessed value of your home. The rest is on the levies that we're voting for, or what's the stat on that?
Well, it varies from taxing district by taxing district. So in some areas, that's true. We have some communities where 50% of their tax is voter approved. And then we have others that are quite low, substantially lower than that.
Okay.
So like I say, it depends upon, one, your value of your property.
Yes.
There is a limitation of 1% that the various tax districts can take, and the voter approval are the primary factors of what constitutes the basis for your tax.
Got it. So the higher assessed value doesn't necessarily mean higher taxes.
That's correct.
Yes.
In fact, we have some very high residential areas on a rate per thousand. They probably have the lowest rates in the county.
Wow. Interesting. So, Lloyd, what about 2015, where the property tax allocated to? Can you talk about that?
Sure. 55% goes to support the K through 12 program.
Okay.
17.5% supports the rest of King County government. 2% approximately the Port of Seattle. Approximately 17% just general government of cities. And then we have other remaining tax districts, like a hospital district or park district, et cetera, that will take a smaller percentage of that.
Okay. And what about property tax relief programs that are available right now, Lloyd?
Well, I'm kind of excited that one of the things that I've been working very hard on is dealing with senior citizen tax relief.
Okay.
And since I've been elected, I've been going down to Olympia to work for seniors, low-income seniors, so they can retain themselves in their home. And we still need some help. Please contact your legislature to see if they can get an adjustment.
Okay.
Right now, it's a relatively low amount in terms of income. Like for King County, $35,000 gross income is not very much money.
Yeah, so they need to make $35,000 or less to get the discount.
That's correct.
Okay.
Now, the other are dealing with disabled folks,
Okay.
especially disabled veterans that have come back more recently from Iraq and from Afghanistan, and they have an opportunity to get tax relief as well.
Okay. Any other specials that are out there now, reliefs?
Well, we do have some opportunity for some exemptions for remodelers.
Okay.
So, for example, some of your listeners are thinking about remodeling their home. They can get, prior to starting the remodel construction, if they come forward to the King County Assessor's office, they can come in and get relief for 3 years on the added value of that remodel.
Okay, got it. So you're making the incentive to make sure they go talk to your office, Lloyd.
Well, it's very important.
Of course it is. That's exactly what I was saying. Lloyd, what about, I want to go back to the senior, because we've, talked about this a little bit, and there's a lot of seniors that fall within that income limit right now being $35,000, as you said, gross income, and they don't realize it, and they're not getting their benefit. So how far, if I've got a senior that's listening right now to this show, how far can they go back and still be able to receive that benefit, that discount?
You have to be age 62.
Okay.
And say you missed it. Say you're 65 now.
Okay.
You can go back and get a credit back for 3 years.
Got it.
And this is a grant. So once you're given the exemption, you do not have to pay back the difference.
Got it.
Okay.
Okay. What new items are coming up at the assessor's office?
Well,
You got some exciting parties going on over there?
Oh, we always have exciting parties.
Wait a second, Lloyd. I'm not getting invited to those.
Well, one of the new things we have that we're going to be introducing here shortly is a brand new web page to make it even easier for those of you that are browsing to get the data that you want. Okay. And the second thing is we're coming out with a feature which we call Localscape, which will begin to integrate parcel data with census data, education data, and several other things. So you will be able to click on and begin to take a look at your neighborhood and see what services are being provided, and also the quality of education that's going on, et cetera. We're right now working with testers to see how it goes. And like I say, we're kind of excited. I think this is kind of a new breakthrough for many in the country. And so, and people that we've shown it to at this far also say, wow, we haven't seen anything like this before.
That's exciting. Lloyd, thank you again so much. I really appreciate having you in studio, and excited to see you again real soon. And I do want to get invited to those parties you're having over at the assessor's office.
Okay. Well, we'll do the rollout party for our new website.
Perfect.
Tina, and you can come to that.
Wonderful. Sounds good. Coming up next on the Money Hour, stay up to date with real estate values and real estate listing insights. Skylar Olsen with Zillow right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 28th show, bringing in expert advice and inside knowledge on today's events in our local economy and how it can affect your money. That is the reason that I'm here and the reason why this show exists. If you're hearing my show at a different time or day, you're listening to a rebroadcast, you can talk to any of the guests that I have in studio. Call into the show at 1-855-400-1150. Again, it's 1-855-400-1150 or online at themoneyhour.com. Right now in studio, Skylar Olsen with Zillow. Skylar, thank you so much for coming back. It's always a pleasure to hear what's happening over at Zillow. We had Lloyd in from the Assessor office and you from Zillow, so lots about what's happening in the market.
Yeah, thank you for having me. It's always a pleasure.
And a little background about Skylar. Skylar joined Zillow in the summer of 2012. Her research and that of her team is used by consumers, policymakers, and other researchers to understand real estate markets and make better decisions. Skylar created many of Zillow's real estate index and matrices, including the buyer-seller index and one of my favorites, the buy-rent breakdown horizon. She currently holds a PhD in economics from University of Washington and environmental
Say that.
Environmental. Oh. She currently holds a PhD in economics from the University of Washington, specializing in environmental economics. Her academic work focuses on using housing data to explore environmental issues. Prior to her working at Zillow, Skylar was honored for teaching excellence by the University of Washington. Also speaks all across the country for Zillow summits. Again, Skylar, it's just exciting to have you here. And I know you guys are doing a lot of amazing things over there at Zillow. And I want to talk about what's the high-level view of Seattle housing market right now.
Yeah, as your previous guest mentioned, Seattle's doing really great, right? We have really incredible job growth. I think 57,000 new jobs added in 2014 alone.
Wow.
It's really feeding housing markets in this area. We saw over the past year, housing values went up across the entire Seattle metro. So that includes those three counties.
Yes.
Went up 6% year over year, which is still very strong home value growth, and that's been coming down from some of the record high numbers that we saw in previous years. But a lot of the strongest growth where, how home value appreciation is being maintained and continues to be fed is surrounding those tech centers, right? So places, Bellevue, Kirkland, downtown.
So when you're talking about the employment percentage of growth that we've seen there, do you know what that is in comparison to what we've seen?
You mean a pickup of
correct.
Job numbers?
Uh-huh.
I don't have those job numbers in front of me, but the other day we were ranking across, employment growth in different metropolitan areas across the country, and Seattle is definitely up there with the fastest growth in many areas.
Yeah, that's so exciting. And are younger Americans going to start buying houses? Some say that they're kind of preferring renting. And what are you seeing kind of in that age group?
Yeah, that's actually a really interesting direction of research that we've been diving into and trying to flesh out because a lot of people are interested in that topic. And one of the things we heard a lot before we started doing a lot of investigation was that younger Americans, millennials, they don't want to buy. So we did a survey. We went out and asked them. Right? And it turns out 83% of millennials say they have expectations they'll eventually buy a home. 53% of millennials who are renting that we asked say that they plan on buying within 1 to 5 years.
Okay.
So they plan on buying. It's just going to take them a little longer. And there are certain things standing in their way that's been slowing them down.
So what are those things?
Well, one of those things is you're just, this is a generation that's delaying major life events that precipitate home ownership, right? So specifically, they're getting married later and they're having babies later. Interestingly, actually, they're delaying marriage by a little bit longer than they're delaying baby. The age of first birth is 1 year before the median age of first marriage, but, this is a new age and new choices, right?
Yeah.
So, but once we find that it's that finding the long-term partner where you're finally able to maybe give up on living downtown or renting or being more transient, and you're ready to be more stable, stay put for longer, where buying makes more sense.
Yeah. And because you would have to imagine in that age group especially with the data that is all around us, that they're doing the research. It's not the lack of information that they're not. So that's interesting to hear that those life changes and things are really of why they're making in that commitment of home ownership. Yeah. Because you and I probably would agree that the opportunity to buy a home and all the benefits versus rent, I don't know why people would be renting except for they just don't want to have that commitment of home ownership.
Right. And there's also some, we all know, right, as you were talking earlier about having that down payment, right?
Yes.
So you got to have that down payment in order to buy a home, right? That's kind of one of the...
Well, unless you qualify in the income bracket. If you make less than $97,000, there's a lot of grant programs.
That's true, yeah. And there's a lot of opportunities out there. And so, one of the things that we find, though, is millennials in particular... they're, to the extent that right now they are a generation that rents more, they have low home ownership rates at their current age. They're also, rental affordability is a huge issue. Particularly in Seattle and other major metropolitan areas where there has been so much population growth, supply has not been able to keep up. I know we joke about the crane and how construction is kind of crazy around here, but population growth is also incredibly crazy around here.
Are you still seeing that there's multiple offers that are coming in on rentals?
A lot of so the rent is slowing down on the high end.
Okay.
Right. So and
high
that
end
makes
would be
sense.
Considered.
Yeah, let's see. So I actually don't have the tier breakdowns on the rent angle.
Okay.
Yeah, but when we think about what the construction that we have seen, it has been on that more luxury end, luxury condos downtown in prime areas. These are expensive, very high valued place to live. So the supply started responding to all this rental demand, but more on the luxury end. So that's been starting to slow down.
Okay.
Right? But on the middle tier and on affordable units, they still go like hotcakes, right? And you still have a lot of pressure on rent values in that space. Yeah. And if you're paying an incredible amount on rent, it makes it very hard to save for a down payment, especially in a population that has record high student loan debt payments, right? And other debts that they have to take care of. So it's a hard time to save for this generation.
Yeah, and so if you're one of those listeners, it's a hard time to save, and you're just making a decision just because it's the idea of homeownership. You're not in that time of your life where you want to buy a house and be committed and stuck like that. If that's what you're thinking, then this comment is not for you. But if you're sitting there renting, thinking, "Oh my gosh, I totally get what Skylar's saying, and it's actually kind of stressful not knowing if my rent's going to be going up, and I don't have the money to buy a home," just pick up the phone, give the show a call, because look at what your options are. Take those options back to your mom and your dad and your grandparents and see if any of your family members are willing to help you out. Because if you make too much money to qualify for a grant, and if you make $97,000 or less, you don't make too much money. So if you make more than that and you can't qualify, maybe there's some options to help get you in, because the numbers can be pretty amazing when you look at them most of the time. Skylar, let's talk about expenses in the area in that.
So we find in Seattle that you end up paying, so let's say you're out there renting, right? You're going to end up paying around 31% of your income on on your rent.
Okay.
Right? Is that how it kind of breaks down? And that's really much higher than historical levels. So before, in the Seattle Metro, that was much lower, right? It was more affordable to live here.
Yes.
Right. Okay. But rent has grown, has grown so much faster than income. It's just been outpaced that now it's fairly expensive to rent.
Yes.
Flip it on its head and talk about, let's ignore that down payment for a while, and just focus on the mortgage payment, right? That mortgage payment, because interest rates are still so low, right, have remained low. And even if you're paying private mortgage insurance, so you're paying that, let's just assume it's kind of like I know you mentioned a lot of how many options that there were but let's just think about it for a second as it's just kind of effectively increasing your interest rate,
okay,
more
of
or less.
Course. If you're paying it monthly, it would.
That's kind of how it functions.
Yep.
So even, so right now, super low interest rates, even once we add that primary mortgage insurance, the share that you would spend on a mortgage is still very low and certainly much, 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 much lower than millennials' parents would have paid, or certainly much lower than their grandparents would have expected to pay on a mortgage payment.
And I think, people tend to not think about things that, obviously everybody knows about the deduction. Take a look at that. People don't think about the tax credit, or they don't know about it. There's opportunities there. And also looking at that mortgage payment that you're making, a portion of that actually is going into what I like to call a little home bank account. You don't have access to it till you sell the property, but still the money's going in there. You're paying down the principal, and your mortgage is fixed outside of taxes and insurance. You've got a 30-year, hopefully, fixed rate mortgage, whereas rent, who knows where it's going to be. And here's the other key thing. There's an end in sight. At some point in time, you will actually have an end in sight to where you don't have to pay payments. What do you look at rent? If you get yourself and you're out of the position and wait too long to where you're not in a position to be able to afford anymore, the biggest mistake I get concerned for people that are renters, it's not being able to worry about if your property value is going to decrease, because you hear people go, well, what if the market drops? It really doesn't matter. It doesn't matter if the market drops. Appreciation is an added benefit of homeownership. What do you need to be asking yourself if you're not owning a home and you're paying rent? What if rents go up so much you can't afford that rent anymore? That's the concern, and that's the risk that I think you have as a renter. So what about, let's go back to, mortgage and my arena and what you're hearing over in your arena as far as down payments and options and things that people are looking at.
Well, we're finding that, those lower down payments are just more and more popular than they used to be. And also that credit availability is easing up. It is becoming easier to get a mortgage. Before, buyers had a pretty rough go of it, not only because inventory was very low, which, we still have that problem in this area, actually. Still waiting for that to come back a little bit. But
please come back.
Yeah, totally. Before, buyers also had the added difficulty of credit that just was incredibly constrained. Almost because of an overreaction to the bubble and some troubles that we got into there. Well, now we're starting to see, loan to value ratios that, are a little higher. We're starting to see, more credit being extended to, lower credit scores. So that is certainly easing off. And, to your point, when you were talking about the buy rent break-even decision, right? I think you hit the nail on the head in the sense that you got to be thinking, you got to live somewhere. You're going to be buying or you got to be renting. And in a place where rent is growing very quickly, that really does contribute to, the decision to buy. But it's not just that. It's, as you also mentioned, you're watching the equity grow in your home, and it amounts to being a bit of a savings and, a piggy bank. And when you rent, one of the options that you have is, instead of, you didn't pay that down payment. So instead you could be taking that money and investing it in stocks or bonds. But if you're not comfortable doing that, you're not someone that's going to, search out there to form that investment, that, and a lot of Americans aren't, right? We see that they don't actually, buy stocks or bonds or invest to any great rate, that that buy rent decision is really going to come down even more towards buying. And of course, it's always very personal,
of course.
But, when you're thinking about, whether or not to buy a home, thinking about, the fact that not only are you going to be buying housing, but an investment.
Exactly. Skylar, thank you so much for
thanks for
coming in.
Me.
Yeah, I definitely look forward to having you come back.
Alrighty.
Coming up next in the Money Hour, long-term care insurance is important coverage that provides valuable support and financial resources that help cover the cost of long-term care that you might need in an even fair illness, accident through normal effects of aging. And Janet Greenling with Genworth Financial PNW Insurance Services right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Mom, Dad, let's talk. It seems like only yesterday your parents were offering you advice, but now you could be the one in a position to help them. Do they have a plan for the future? Can they afford a comfortable retirement? How would they handle a long-term care event? Are they prepared emotionally and financially for their future? Starting those conversations can be challenging, but I can send you some materials to help you say, let's talk. Call me, Janet Greenling, at Genworth Financial PNW Insurance Services, and I'll send you the Let's Talk guide free of charge. Please call 206-240-8274. Again, 206-240-8274, or go to our website at www.pacificnwagency.com.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 28th show. It's a great day to talk money. I think every day is a great day to talk money. That's why I'm here with you and what the show's all about, how to make money, save money, and build a better quality of life for you and your family. If you're hearing my show at a different time or day, you're listening to a rebroadcast, call into the show at 1-855-400-1150. Again, that's 1-855-400-1150, or online at themoneyhour.com if you want to discuss anything that you've heard in studio, or if you have any ideas for future shows that you'd like to hear. Let me know. Your feedback's important to me, and what's important in your life when it comes to your finances is important to me and important to the show. So please share that with me. And right now in studio, Janet Greenling with Genworth Financial PNW Insurance Services. Genworth is running a new campaign called Let's Talk. The discussion here today is tackling how to get the conversation started with your loved ones and to get us all thinking about what ifs of living a longer than financially planned for life. Let's get real. Let's talk to our families about what they want for their future before the event occurs. Oh my gosh, you're just going to bring tears to my eyes, Jen, and I'm sorry. Sometimes you have those emotional moments. This is really important. It's really important. And I like for you and your background, I'm going to share my listeners a little bit about you, but inspired you in what you're doing right now in your profession. And it's so important for our mothers and our fathers and our grandparents, and just to really have this conversation. And so I'm just excited to have you here. And sorry, I just had a little moment there, Janet.
That's okay. I have them all the time.
Yes. And I look at you and it makes me have it because you're in the industry, and I know why you're doing what you're doing. Janet's long-term care began with a personal long-term care experience with her own mother. Now, 6 years later, she sees so many things that she could have done differently that would have saved her family years of stress and financial concern, and saved your mother in financial stress and concerns as well. Janet entered this industry first to help a pilot and the USAA account for a local long-term care broker, then moving into national account acquisition and doing contract work for the country's leading long-term care awareness nonprofit 3 and 4 Need More. She now has found her home as a marketing director for the Pacific Northwest agency of Genworth Financial, and she's dedicated to working with their agents to become stewards of the industries through education and planning. Educating people is the key to success in long-term care planning. And isn't that so true?
Very much, very much.
And Janet, let's go ahead and start out with long-term care and what makes the difference from other types of insurance, life, disability. So break that down for my listeners.
Sure. So, take a look at everything that you insure. You insure your home. You don't expect it to burn down. Most of them don't, but you do have that insurance.
Yes.
Same with your car. We all have our things that we insure. And then you take a look at, what kind of accidents, what kinds of situations can we end up in. A lot of people confuse long-term disability with long-term care, so I like to bring that out. Long-term disability, if you think about being disabled, you can't work. So long-term disability is replacing your income.
Got it.
Long-term care is helping pay for your care.
Makes sense.
Two very different. A lot of folks, they cover themselves on life, they cover themselves on their home, even their disability, but they forget that the cost of that care is often what puts families under.
Yes. And, I was just talking about that with my stepdaughter last night, and I need to share this with you off mic and off studio on my experience last night. But we were talking about how people, they can become homeless in just one instant with not, getting cancer. And so I totally agree. So let's talk about the unexpected long-term care needed and how to pay for it. Right.
So again, we many of us have different levels of savings. We have our working checking account that we pay our bills and live our daily lives. If we're fortunate, we have one or two other tiers of savings that we can reach into when needed. And then hopefully you have some sort of a 401k or a retirement plan, IRA, something like that is basically untouchable unless there's a catastrophic happening.
Okay.
So knowing that and realizing that a catastrophic event happening long before you would need your retirement funds then changes the dynamics of what do you do now when you retire.
Yes.
If you're needing to pull out of that money at age 40 due to a car accident or you end up with Parkinson's or, there are occasions when you need to delve into that. Or as you age, if you get to the point where you need to start using that income for your retirement, how has that done in the marketplace? There's no guarantees.
You don't know if it would have happened after the, financial meltdown.
And that is exactly, without going into the details, that's what happened to my mother.
Yep.
The housing market and the stock market crashed all at the same time. And everything we had banked on with my mother owning her home free and clear was completely null and void. We didn't even sell her house till after she died.
Yeah.
So we weren't even able to access those funds.
Janet, what about the cost of current care right now?
Great. Thanks for asking. Right now, an average cost of care for the state of Washington runs right around $109,000 a year.
Wow.
So if you break that down and if you're thinking, gosh, I pay $2,500 on my mortgage every month. Now, break that, let's just round it out to $100,000.
Yeah.
How much you're going to be putting in just for the care. Now, considering also that if that care is needed for one individual, say your father needs the care, but your mother's not ready to go into it.
Okay.
She's having to keep her standard of living up while also paying for care for that spouse to be somewhere else.
Wow.
And that can be a tragic set of circumstances.
I have a financial planner that visits me in studio and shares her information with my listeners quite often. And she talks about using an example which really connected with me on, asking a question, would you work for your employer for 5, 10, 20, 30 years and never get a raise?
Right.
Let's talk about your retirement income and inflation.
Right. So one of the ways that you can battle this is using long-term care insurance.
Okay.
I would say most people, if they're not aware of it, they're self-insuring.
Yes.
Which simply means they're going to say, my retirement is going to be enough. If you put a long-term care product into place, it's going to have an automatic inflation protection added to it. So you might get 3, 4, 5%. So that pool of money is going to grow with you as you age and grow. So that's going to help hedge that bet that there will be a pool of money there for you when you need it.
Yep, makes sense. So what is your plan if it gets harder to perform your acts of daily living or ADLs, such as bathing, feeding, transferring, toileting, etc.? I mean, all of these things. What if your partner is having difficulties with these?
Right. So, again, we never think these things will happen to us. You don't think you're going to be the one that gets in a car accident the day you don't put on your seatbelt. You don't think you're going to end up with cancer. But as we age, we do start to lose some of our abilities to do our daily acts of living. And a long-term care event, a policy gets triggered when you cannot perform 2 or more of the things that you just listed there, such as dressing. Just think of what you did to get up in the morning and listen to this show.
Yeah.
You
really don't. You really don't think about what you do to get ready for the show. You just get ready for the show until you've lost one of those or two. And
exactly. And you think, I'm in great shape. I'll always be able to get up and tie my own shoes and bathe myself. But the reality is, those things can slip away from you in a moment's notice, whether it's a stroke, an illness, an injury. And if you take a look at that as well, I have a lot of people, I say, well, what are you going to do if that happens to your partner? Yeah. Well, my wife's always taken care of me. She's been great. She's been right by my side. She's pledged she'll always care for me. Yeah. Well, now advance yourself 30 years. Is she going to be able to pick you up from the floor when you fall? Yeah. Is she going to be in a situation that is maybe a cognitive problem, which by itself triggers long-term care? I mean, there's so many things. And when you look at the statistics that 3 in 4 of us will need long-term care in our lifetime.
Yeah, that's scary.
If your chances are 72% or higher that you're going to need care in your lifetime, and your chances of your house burning down, I don't know what those are, but I assume it's much lower. Gosh, isn't that something we need to talk about?
Good point. Yeah. What about the family members that are involved in really helping and preparing and planning for this?
Right. So taking into mind, I know my generation, the generation of my parents, they were very closed-mouthed. I don't think I ever knew how much my father made, really. Yeah. Those things weren't discussed. That was not our business. But we're getting to a point now where we need to open up and get that cup of coffee, that nice hot cup of tea, sit down and talk with your family. If you've got a policy, call into your local carrier, say, I need an agent to come to my home, start a relationship with me, and go over my policy with my family members here so that those family members know how to turn on that policy and what's involved with it, because what we're trying to do is give you a peace of mind.
Yes, yeah. And, we were at the home show together last year in the fall. My timing gets all mixed up. And there was a lot of guest speakers that were coming up on stage and workshop events. And it was really amazing to see when the children and the parent were coming to these workshops together, and all of a sudden you saw these conversations starting in these engagements, and then they were coming over to the booths, and I thought, wow, what an amazing idea. Just get some education and go together, and that can be a really great way to start that conversation, and then you have your one-on-one personal visits.
Absolutely.
I mean, I was just, and you could tell that they hadn't been having these conversations. It was just kind of random thing there at the home show, and they pop over there to get some education, and then all of a sudden, I mean, it was a real blessing to see that going on. Right. So what questions can you ask to get the conversation started?
Right. So Genworth right now, like I say, is running a wonderful campaign called Let's Talk. We even have a fabulous deck of cards that a lot of our agents use. Yeah, it's real fun. And it's got, they've thought of these wonderful questions just to get the conversation going again.
Will you get me a deck of those cards?
I will get you a deck of those cards.
We do family game time with my mom. It would be fun.
Absolutely. Yep. It is. It's fun. They're colorful, they're bright, and they're very simple, just to get you thinking, what are your fears regarding a long-term care illness? Do you want to leave a financial legacy? What would be most important to you if you lived to be 100? Yeah. What if you needed care due to an accident today? Do you want your children or your spouse to care for you? And could they? All these little conversation starters just to break the ice with your parents, to say, I care, I love you, and I want to make sure what you want going forward is achievable and attainable if there comes a time when you can't tell me that.
Yeah. Wow.
And I had that conversation with my mother in the hospital saying, Mom, let's talk right now while you can still tell me what you want.
Yeah.
and I can honor that as you go forward.
Makes total sense. I'm just thinking we really game night. A game thing is a really big. We do it at least on a quarterly basis at our home when we've got Dave, my husband's mom, and my mom and siblings. And it'd be really fun to have them do a questionnaire ahead of time, answering these questions, and then use the cards and see which one of us siblings knows exactly what they want.
Absolutely.
And I bet you it would be a really fun game. And somebody's going to win, and someone's going to lose pretty bad.
That's right.
I'm sure of it. Well, Janet, a final tip to leave with my listeners that they have before the next chance they get to listen to you on air. What would that be? What is your most important message you want to give right now today?
Most important, like I say, talk. Just start the conversation with your spouse, your children, your siblings. Know and care for one another, because as much as we don't want to face that this might be an eventuality, when it does hit, it is traumatic. And you suddenly are having to think of the littlest, tiniest details that if those things had been worked out and a long-term care policy was in place, you wouldn't have to be worried about how many hours your father's going to have a caregiver come in, or all those little tiny details. You have a peace of mind. So start the conversation today.
Great advice. Janet, thank you so much for everything that you are doing for our elderly community. Thank you for the education that you're providing to the professionals in the industry, because in my industry, I know, and even as important, if not more important in your industry, is the continued education. So thank you for everything that you do for our seniors and for their long-term care.
Thank you so much for having me. It's always a pleasure.
And thank you to all of my listeners out there. This is your host and mortgage expert, Tina Mitchell. And I got to say, I got to sign off for the day. My engineer's snapping her fingers over there. The show is done, but I will be here next week, same time, same place, right here on 1150 AM KKNW. Enjoy the rest of your weekend. Thanks.
The preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.